Welcome to Speidel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering a recent tax court case that looked at the applicability of self-employment tax to limited partners. We'll be covering this case at Speidel's Federal Tax Update webinar on January 4th and 5th, along with the Clean Vehicle Credit, Secure 2.0 Act changes, beneficial ownership reporting requirements, and more. Get details and get registered at speidel.com under webinars. Regarding the applicability of self-employment tax to limited partners, the general rule is that partners are subject to self-employment tax on income received from the partnership for guaranteed payments for services and for the partner's distributive share of partnership net income. There are exceptions to this general rule, one of which provides that a limited partner's share of the partnership's distributive net income is not subject to self-employment tax. But in the Soroban Capital Partners case, the tax court held that limited partners are subject to self-employment tax where they're a limited partner in name only. The determination of whether a partner is a limited partner in name only requires a factual inquiry into the functions and roles of the limited partner. The taxpayer in Soroban was a limited partnership whose limited partners received a combination of guaranteed payments for services rendered to the partnership and a distributive share of partnership net income. The partnership reported that the guaranteed payments paid to the limited partners were subject to self-employment tax, but their distributive share of the partnership's net income was not subject to self-employment tax. After audit, the IRS determined that the limited partner's distributive share should also be subject to self-employment tax because the limited partners were limited partners in name only. The taxpayer argued that a limited partner under state law, meaning a partner who is defined as a limited partner under the laws of the state where the limited partnership was organized, automatically meets the limited partner exception. But the tax court's analysis focused on one phrase of the limited partnership exception in IRC Section 1402 that says that the exception applies to a limited partner as such. The IRS's argument, with which the tax court agreed, was that the limited partner exception only applies where the limited partner's earnings are of an investment nature. This, according to the IRS, was the purpose of the qualifier as such, which was added to Section 1402 in 1977 to essentially exclude earnings that are of an investment nature because of concern at the time regarding the use of limited partnership investments to obtain Social Security benefits. To determine whether earnings allocated to a limited partner are of an investment nature requires a factual inquiry into the functions and roles of the limited partner. The tax court only ruled on the application of the limited partner exception as an initial matter, so there was no factual inquiry in this case. Later proceedings before the tax court will determine whether Soroban Capital's limited partner's distributive share of net income are in the nature of an investment. But the court did provide an analysis of an earlier tax court decision dealing with a law firm that operated as a limited liability partnership. The earlier decision held that the partners in the law firm were not limited partners for purposes of the limited partner exception in Section 1402 because their distributive share of partnership net income arose from legal services performed on behalf of the partnership and not as a return on the partner's investments. Stay up to date with tax law changes with a subscription to Speidel's Federal Tax Letter. Get more information on this monthly newsletter at speidel.com under Publications. That's all for this week. Join us next time for another episode of Speidel's Federal Tax Minute.